Oh, hi everyone. I'd like to do a video on NEXO. We do hold NEXO in our portfolios. I certainly regard it as a core blue chip investment coin. I think it's an amazing story, and I think the FUD out there is just absolute FUD. So I'd like to go through this Twitter thread that they came out with yesterday. Also, I'd like to explain this chart, but what I want to do first is go through the Twitter thread first, and then we'll come back to this chart in detail. I'll be doing a couple of videos on NEXO. I believe NEXO is secure. It's an amazing model, business model particularly, and they have amazing technology, okay? So let's just go through this, and if you've got any questions, please do come back to me, my patrons. Thank you. So, this is all from NEXO, it's official. NEXO have said they've come out, they developed in 2018, and their offer, basically, people really need to understand the NEXO business model. It's very important, okay? So we will come back to this chart, but I want really Liz to talk to this chart as well, who's our technology expert specialist, and we'll go through this a lot too, okay? But we need more detail too, but we will explain that going forward. So if you look at this, NEXO came out on 28 and said, the business started in 2018. NEXO's business is in the facilitation of collateralized credit. Now, this is really important. They never do anything without getting enough collateral from the investor that uses NEXO's app, okay? So in other words, you have to, if you want to borrow money from NEXO, you have to put money into NEXO, either through Tether or a stable coin, or you transfer your cryptocurrency to NEXO, keeping in mind that you will lose custody of your own cryptocurrency. And if something happens to NEXO, clearly, they have your cryptocurrency, and that's the risk you run. But keeping in mind, NEXO also have a banking license as well. So, NEXO, just looking at my notes going back ages ago, NEXO bought a bank. It's called Hewlett Bank. It's a Switzerland-based bank, and it's called Summit National Bank, which is, there's connection with the US bank called Summit National Bank, which I'll explain later as well. So what they differ with others in that they have real-time risk management engines. And what that means is they know the valuation of all their assets. They know the valuation of all the clients' assets. They know the valuation of all the collateral that they hold on behalf of the client that wants to borrow money again with them. And they have the valuation for the whole balance sheet, cash flow, risk management, liquidity, and so forth. So they are highly, highly liquid. What they mean by this is, if a client gives you $2, right, and the client gives you $2 worth of cryptocurrency, they're only allowed to borrow a third, right, or 33%. And that's what that means, right? So they always are highly liquid because they never risk a client borrowing any more than their collateralized funds or their funds that they've given NEXO, right? And you can only borrow 33%. So give an example, USD Tether, you deposit, say, $2,000, you can only borrow 33% from NEXO to basically take on more cryptocurrency, right? 33%. And that is mark to market, revalued every second of the day, and it's in real time. NEXO has a real-time blockchain system, okay? And we'll go back to that original diagram I showed you, but we'll talk about this in much more detail later on, okay? Business model, risk management, flow of funds, and so forth, okay? It's a lot more detailed than that, by the way. So they also came out and said NEXO's core services complement each other and make the enterprise profitable. They include crypto-backed loans, margin lending, institutional over-the-counter loans made on a collateralized basis. Collateral is everything, okay? People earn interest on products and staking, and if they want to do trading, you're going to have to put up $3,000 to borrow 33%. Okay. So in other words, whatever you do with NEXO, you either have to provide them with US dollars or Euro dollars or whatever, whatever you give them. If you put in $1 with them and you want to borrow money, you can only borrow 33 cents if you want to buy crypto as an investment. Okay. If you want to trade cryptocurrency, you have to put more in, which is fair enough because the risk rises with spot futures, options, and over the counter. So if you want to borrow from NEXO and you're trading, right, you've got to put up $3,000 to get 33%, or $3 and you get 33 cents borrowing capacity. So as the risk goes up, depending on what you're doing, they ask you for more collateral. Collateral is your cryptocurrency assets you give to NEXO. If you give NEXO a market value of cryptocurrency assets of 5,000, say it's Bitcoin, XRP, or whatever, and the market value today is 5,000, you'll only be able to borrow 33%. Okay, a third of that 5,000, whatever that is, $1,500 or something. Okay, if you pay with money, not money, but Tether, right? It's the same story. You have to give them $3,000 worth of Tether or Euro to borrow 33% Euro. So I hope you understand this. It's very clear to me. So they also, have loans where you can earn money, staking, this sort of thing. There's high yields, but these yields are subject to borrowing rates as well. They just don't pay out on one side, 12% for Euro or US dollars, 12% going out, because they're making on the other side from their assets that are earning them 13.9%. Okay, it's not a one-sided transaction here. Okay, so in other words, if you hold US dollar Tether with them or Euro, and that's all you do, you get 12%, right? Interest, APR, annualized return, right? That's fine, but that's not all this system's about, paying out 12% when the US 10-year Treasury bond is at 3.69%. On the other side of that, they make loans to people. People borrow money from them, and those borrowing rates are higher than the interest rates on your deposits. Okay, that's what I want to make clear, right? Very clear. So, again, the high yields are subject to the fixed terms. There's a threshold, token requirements, and all that sort of thing. Okay, so again, they've got more collateral in the game, NEXO, because the interest rates they pay out are never higher than the money they get in from the client borrowing money. It's just that simple, okay? And this is what you've got down here. As it gets higher and higher, the risk comes in even more and more and more, okay? Where you have to put more money in to get a 33% borrowing facility, okay? It's a very low LTV, which is loan to ratio value, extremely, extremely low and very, very conservative, okay? Now, also, the company has a positive net interest spread. And what that means exactly is they're earning more on the money they lend out to their clients, whether it's retail or institution, than they pay out, right, on your deposits, right? This is the whole idea of risk management. All your deposits, all your outgoings, all your collateral, all the borrowings. But the borrowings are only less than a third of their overall assets and their overall cash flow that's theirs, okay? So their net interest spread is positive. So even the worst base case, if you're earning 12% on your USD Tether or Euro at 12%, the borrowing rates start at 13.9%, right? 13.9% if you have zero NEXO tokens, all right? And that's really important, okay? The way they pay you money also is important. You might put in US dollar Tether or Euro, and NEXO will pay you 12% interest. But the thing is, it's not paid in a cash flow of interest. It's paid with NEXO tokens, okay? Another important thing, it's paid with the equivalent NEXO tokens, okay? So again, they're not physically paying out the 12% from their cash flow, okay? If people don't understand this, they shouldn't be in cryptocurrency markets. Fair income, they just should not be. And all the FUD out there is a bunch of idiots that have no expertise in markets, let alone financial markets, let alone cryptocurrency markets, which are 1,000,000 times more difficult because of the technology and everything else than fiat markets. And honestly, these people should not be in business, okay? So everything that adds to NEXO's bottom line, i.e. the borrowing rate, the clients, they get 33 or 3%, and everything else where NEXO makes money adds to their income line of 5, right? This is a business with assets and liabilities and capital, okay, and cash fund. NEXO do not pay out 12% in cash. They pay it out in NEXO tokens, and there's strict regards to how much you can get from them and how much money you can put in and all this sort of thing, okay? Absolutely, right? To lower NEXO's risk in managing the risks of this market, which are huge. Volatility, you know, sell down risk, futures, derivatives, people just sell whatever they want and keep destroying the market, right? NEXO's been very smart about this because NEXO can only be traded on limited exchanges. There's only so much NEXO, and they don't allow large placements of NEXO sitting with the institutions that then sell futures on NEXO. And NEXO doesn't have any derivatives against it either, by the way, okay? So unlike FTX that had a lot of derivatives against it, NEXO doesn't. They're incredibly conservative, absolutely conservative. If we go to the next thing, let me explain this. Jane wants to earn interest on her 130,000 coins, stable, they're supposed to be stable, but anyway, let's assume they're stable, and she earns 4 to 8% annual, okay? Then John comes along, right? He wants to borrow some money against his 260,000 Bitcoin. Now, John's only allowed 33% borrowing, okay? So John's going to get killed at 3.9%. It's going to cost John 3.9%. Jane, who originally deposited the stable coin, might get maximum 8% or 9%, but the margin between NEXO, right, making you pay for a borrowing is much higher than the money they're paying out, which is not cash, they're paying it out with their tokens, right? There's no cash flow for NEXO. All they get the margin between that and that, but also there's no cash flow. So a matter of fact, it's actually more advantageous to NEXO, okay? More advantageous, which adds to their revenue line. So again, their revenue line, say is 6,000, you know, but their collateral against clients' loans, right, is 33%. This model makes a lot of money, and it's a very smart model and extremely sophisticated, okay? All this stuff adds to NEXO's bottom line. If people don't understand that, they must be pretty silly. So again, they offer other things, right? Spot futures, options trading through NEXO Pro and NEXO Prime. It's a natural extension of our lending services. Margin is essentially a loan for direct purposes of leverage trade. So you borrow margin or you borrow money from NEXO, then you can buy or sell, you know, cryptocurrency, right? But there's a funding rate involved in that, which NEXO gets. They get paid that from you, who borrows the money, and their fees can be significant, right? In volatile times, and NEXO wins. They're like the casino, okay? So again, that adds to their bottom line, right? 7 against 33. This is not changing, okay? Now, if Mary has 100,000 and she wants to go long Bitcoin with 3 times leverage, she has to pay for that, right? So it's like she's got $300,000 position on Bitcoin against 100,000, right? Josh wants to earn money on his USDC. He might earn 4 to 12%, but he gets paid out NEXO token. That's the thing. There's no cash flow. And then, the thing is, Mary has to pay more than 13.9% to borrow the money. It gets a bit confusing when they're saying she's borrowing it from John. Look, it's a massive pool, okay? So there's all different monies coming in. But the bottom line is, the most easiest is what they're saying is John, with his USDC coin, is going to earn, annualized 4 to 12%, okay? And we've seen that with NEXO. That's the price. But they pay out that interest with NEXO tokens, right? And maybe it equates to 12% per annum, but it's not physical cash flying out the door, okay? But then on the other side, they're getting physical cash from Mary, who borrowed, she's placed 100,000 and she wants to borrow 3 times the leverage, right? She's only allowed 33% against her 100,000, 33,000, right, to go leverage on Bitcoin, short or long, and that will cost her 39% and up. And there is a cash flow there that goes to NEXO's tin, okay? NEXO win again, right? So to protect both clients, they basically have a net interest rate engine, which is based on collateral liquidations. NEXO essentially takes so much money from you, but your loan to value ratio is extremely low. Literally the market has to get so aggressive and so volatile in your coins that, for you to basically, have an LTV of 33%, which is only a 33% borrowing against 100, right? $33. The market's got to fall a lot for you to get liquidated. But the point is, if it is like that, NEXO have an automatic liquidating model within this, which is this, right? Automatic repayments, and that will come off your physical cryptocurrency that you have with NEXO, that you have in NEXO's custody, okay? Automatic repayments, very similar to a DFI protocol like Aave or Maker, and their collateralization ratio, their ratio falls extremely, okay? Absolutely extremely, right? And yours, you basically pay for any market movement. And NEXO has no risk because this is live, happens every second, okay? Every second. Their liquidation engine is diverse because they have it across many different exchanges, decentralized and centralized. And when they have to liquidate, they get the best execution price with the best liquidity, okay? So they're trying not to charge clients an arm and a leg if they get it wrong. And they try to do it the best, and it's automatic, absolutely automatic, right? They don't rely on their in-house matching engines and order books like traditional cryptocurrency, but aggregate liquidity from 10 different venues for smart order routing so that they get the cheapest access to selling client positions when they're wrong, and try to reduce the spreads and the fees, but they still make money because the client has to cross a spread with NEXO's engine, okay, in-house engine, and NEXO still makes money. And at the same time, 12 compared to last time 11, and at the same time they're maintaining their exposure of 33% to clients that are leveraged up. Okay, so all these activities, exchange service, crypto-backed loans, collateral, liquidation, staking, they're all revenue generators to NEXO. Okay, they're all revenue generators, right? And they add profit to this company. And at the same time, their risk is still the same. Okay, the risk is they've lent you out money and they want to make sure they get it back, right? And the way they make sure they get it back is you have to give them $100 for them to lend you 33 cents, $33, okay? If you give them $1, you can only lend it. You can only borrow from NEXO, I should say, 33 cents. Okay, very, very clear. Very, very clear indeed. I mean, don't forget they're regulated. They've also got insurance, an insurance fund, you know, with Lloyd's of England. You know, it's about 150 million or more. They've got a banking license. I mean, it goes on and on. Also, NEXO hold a lot of different assets on behalf of clients. They hold a lot of different assets, right? And there's all, you know, there's funding, there's interest rate costs that the clients have to pay. There's funding costs the clients have to pay, right? You know, NEXO looks to all the other exchanges and gets the best price, but also in those times they could generate alpha generate revenue in a market neutral way. And what that means is they do spread trades. They'll find something maybe on one exchange, Bitcoin's at 16,000, and on another exchange, it could be at 16,400. Alpha generation, market neutral ways, your overall net position, I bought from this exchange and I sold on that one. My net position is 0, but I've made money, okay? And that's still adding to their bottom line when their overall, you know, exposure to clients that don't pay their loans is 0.33 out of 14, okay? This is how you should be reading this, people, and people just don't get it. Also, they're smart operators. The people working in their treasury know their stuff. They know how to do arbitrage, reverse cash and carries, all sorts of things. Do you buy the physical? Do you buy Bitcoin futures? Do you sell Bitcoin futures or buy the physical, right? Those ratios change all the time. And that's also how they make money, okay? And they capture the funding rate and all sorts of things. As I said on my podcast today, you know, on BitByte, you know, going short, you know, Bitcoin was going to cost you negative 0.33. But if you went on Binance, it was going to cost 0.0035. There's an arb there on the funding rates, an arbitrage. They're different prices that you can make money out of. And that's how NEXO does it. They make money out of that, okay? Even, you know, neutral strategy is not long Bitcoin or you're not short Bitcoin. You just take the bit in the middle, right? The profit in the middle, right? Bought and sold on 2 different exchanges, capturing the spread. It's as simple as that. Like I said, I go to Qcoin. Bitcoin's at 1,600. I go to Binance, it's at 16,400. What am I going to do? I'm going to buy it, Qcoin, transfer it to Binance, and then sell it on Binance and have a nice little profit about, after fees, $380. Okay? Simple as that, if I have one Bitcoin. And that adds to the revenue of their bottom line. Whilst the money they've lent out to clients is only 33% of the revenue of their bottom line, okay? Also, they use POS, blockchains, right? You know, which is quicker, okay? Quicker, more scalable, cheaper, finer margins, right? Finer margins, and so therefore they can show a client a price and they get another price and they take a clip, you know, of that deal. You know, they take some points out of it or profit out of it, right? Again, adding to their revenue, right? Their strategies generally are market neutral and they manage risk, just like a bank would. Exactly what we used to do in banks, right? Manage, you know, the risk. We do spread trades. We do physical against futures. We do reverse cash and carry, all sorts of things, right? You know, and so they earn interest, right? Constantly, you know, and, you know, they earn interest with products that there is no need for uncollateralized lending. They want everything collateralized, right? And it's as simple as that. What that means is you have to give them more money or coin or token, more, it's going to be worth more than the $33, right? You're going to borrow, or 33% of whatever. So you give them 100, you can only borrow $33. You give them 100,000, you may be only out of borrow 31%, and it's going to cost you more fees if you understand it. This is not one way. NEXO is making a fortune, and the business model is sound, and it's a very, very clever and sophisticated and professional business model, okay? Right. So also, again, you know, they've said this, and this is correct. If you have a lot of idle assets in wallets, cold wallets, you're not earning anything on those assets, are you? Right? You're not earning staking. You're not able to generate returns or anything, right? So the thing is, there's got to be a proper risk management system for how many cold assets do we have in our cold wallet, and this is NEXO would have to do the same, and how many assets are in our hot wallets. Because if there's an opportunity in terms of arbitrage in the cryptocurrency market, and arbitrage is when one price is different for Bitcoin on one exchange to another, they don't want to have to be rushing around trying to get their assets out of cold wallets, okay? So they would have very strict risk management and compliance that they'd have to adhere to next. So certainly the treasury traders, to what and how much they're allowed to keep in their cold wallets and how much they're allowed to keep in their hot wallets, and what they are allowed to trade and how much. And that have, you know, settlement limits, that have trading limits, that have compliance limits, counterparty limits, counterparty risk, you name it, country limits, everything, okay? Exchange limits, right? Counterparty limits, right? So again, this crowd is very, very clever, guys and girls, very clever. And again, it adds to their bottom line. At the same time, the leverage in the business is 33% of a 19, you know, 0.3 of 19 revenue, right? They also make this important point. Traditional centralized exchanges have their own internal order books and matches, and that's correct. And, you know, again, they have to keep everything on chain, right? You know, and the thing is, right, you know, you can add and get better prices if you go to sometimes the DEX or you go elsewhere, right? You don't necessarily have to go through the traditional centralized exchanges, okay? And you know, this is different, and you can actually make money out of it, right? You know, again, proof of reserves, right? This is mark to market, and they show their liabilities, right? Which is even more important, right? Proof of reserves, you know, they've been validated, they've been audited, you know, all that sort of thing, right? And, you know, they're showing over and above liabilities or contingent liabilities, right? You know, they have assets on chain and off chain, right? So that they can, again, monitor all their assets and basically, you know, move them in and out when it's appropriate in terms of what the market's doing, right? They've also got an independent auditor, right? And this is right, assets minus liabilities, right, should equal exactly all the assets in all the wallets, whether it's hot, whether it's cold, or whatever, okay? And it's audited by a proper bona fide, you know, chartered accountant, right? Again, proof of reserves, it's transferable. The auditor, a leading auditor in the US accounting firm, basically signed off on their reserves, right? The auditor, you know, is up for this, right? If they, you know, this US accountant, Manino or whatever, has signed off on their reserves. If something happens, this US accountant can be sued to the hilt, right? To the hilt, because they're regulated under fiat regulation, compliance, know your client, anti-money laundering, the whole thing, okay? Everything. And you're on, the, you know, if you say something wrong as an accountant, director of the firm, or whatever, you could go to jail. That's true, right? Again, with regards to token, they say less than 10% of our own assets are NEXO. Now, unlike FTX, that had all its assets as FTT, right? One day it's worth $20, and that's all the assets, but they had massive loans on the other side. Now, the problem is the asset of FTT kept falling. As the asset keeps falling, the debt, even if the debt's the same, it goes up, okay? The asset's falling. $100 for the asset, $100 for debt. right? When FTT was 20 bucks. FTT goes down to $1. What's the asset worth, right? The asset's worth $1 and the debt's still 100. You know, your LTVR all of a sudden is like, 200%, right? Now, this is really important. NEXO have less than 10% of our own assets as NEXO tokens, which we regard as an asset. It's used as collateral for receiving loans, right? They do not lend NEXO tokens to institutions, because if they do that, institutions can try and short NEXO with an over-the-counter derivative, okay? Whether it be a future, whether it be an option, whether it be anything, right? And this is right. These guys have done it right. Excuse me. You know, the concentration of NEXO is against clients' wallets that are borrowing money from NEXO, okay? You know, and this is a fantastic model, right? A fantastic model. They go on to say the events of the past month are a painful reminder that in order to generate returns in the market safely, companies must adhere to stringent risk management controls. How we think that actions speak louder than words, and would like to point exactly. We think that actions speak louder than words, and would like to point NEXO's track record. These guys are not an FTX, right? These guys get audited. They have risk management systems, real risk management systems that, are updating every second. They know their position. They know their assets. They know their balance sheet. They know their money. FTX had nothing. It was fraud, a completely different story, right? Completely different story. And subsequently, because they've got great risk management, they had no exposure to all these shops that have applied for Chapter 11 bankruptcy, okay? Nothing, because they have stringent risk controls in place to withguard all client funds and assets, and they keep them all different in different silos, right? They do not trade clients' money. It's a back-to-back system. You as a client, if you deposit Bitcoin and you want to borrow some money, you've got to deposit it, and I'll reiterate again, 100 Bitcoin to borrow 33 Bitcoin, which is going to cost you money, right? So if you borrow 33 Bitcoin, you're buying them. NEXO will also, in terms of their overall risk management system, pretty much mirror or copy the same on the other side, right? And that means you have no basis risk between Bitcoin and Bitcoin. But if it was, say, they were going to buy something else rather than Bitcoin, they have huge basis risk, because the return on what they buy may not be the same as Bitcoin, right? Now, FTX was doing that. They had all their borrowings in something else like Bitcoin, which outperformed, and yet, on their asset side, they had FTT, which completely went down. Huge risk, right? Pricing risk from the balance sheet, huge basis risk, which is a risk management measure, many measures of basis risk within a risk management protocol and a risk management system, okay? And again, any proper treasury will have serious basis risk management limits, okay? Limits. You can only take on so much spread risk, so much basis risk, okay? So much term, whatever, so much counterparty risk, so much settlement risk, so much risk to one exchange, so much risk to one client, all that stuff, right? Again, NEXO's treasury management ensures we have effective asset and liability management. And what I've seen, I agree. I've worked on asset and liability management systems for years. Realm, all sorts of things, right? They run like a bank, but even more impressive, okay? They don't have currency mismatch. They don't have maturity mismatch, which is the interest rate curve. They have no interest rate mismatch whatsoever, okay? They, again, they have consistently refused to extend uncollateralized loans to high-flying crypto asset managers, okay? And this is good. It is a fundamental principle for NEXO that has resulted in no bad debt during the market's turmoil. Now, how many exchanges, and I'd hasten to add FTX did this, you know, extended, you know, uncollateralized loans, i.e. they don't have anything against the loan. They borrowed money from NEXO, but this is not the case with NEXO, right? Other exchanges probably did that, but NEXO are not doing it, and they're bona fide and they're regulated and they adhere to compliance, all the AML rules and everything, and they have real-time reporting, you know, every second of their balance sheet, their cash flows, their flows in and out, and their risks, risk metrics, you know, credit exposure, country risk exposure, product exposure, client exposure, settlement exposure, counterparty risk exposure, goes on. And they would have maximum limits for all those. So limits, right? Absolutely limits, you know, and it's an automation collateralized credit facilitation. And if you, again, get it wrong, they will, you know, close down part of your crypto holding that you bought to NEXO. It's as simple as that. So I think, honestly, guys and girls, this is a terrific story. I think there's a lot of people that just don't have a clue, okay? And seriously, this is the whole problem, right? This is the whole problem. You know, there's so many people out there. It's just FUD, and they haven't got a clue what they're talking about. Seriously, honestly. And NEXO, as far as I'm concerned, they're doing all the right things. As I said before, I can't hedge against fraud. No one can. No one can assume, you know, like there was nothing to say that, you know, Sam Bankman-Fried was a fraudster, because look at all the people he knew. But then, you know, again, I have to adapt my analysis not to fall into that again, because someone knows a lot of people, right? You know, some tosser that knows heaps of people. It's caused a lot of loss for everyone. But anyway, guys and girls, I will come back to this graph up here. I'd like to go through it in much more detail with my technology specialist, who's incredible, and we'll go through that. And that'll be the second one of NEXO. Okay, so if you've got any questions, please do come back to me. Thank you very much for listening.